Markets in focus. Futures are mixed this morning as the U.S. and China head into new trade talks today, kicking off a new trade talk conversation. The market's opening after a major rally on Friday with the December jobs report surging past expectations, and Federal Reserve Chairman Jay Powell saying that the Fed is in no hurry to raise interest rates. Joining me right now is Allianz Chief Economic Advisor Mohammed El-Erian. Mohammed, it's good to see you this morning. Thanks so much for joining us.
Thank you, Maria. Thank you.
First, a word on the global slowdown that we are talking about so much, Mohammed. I want to get your thoughts on the pivot that the Federal Reserve certainly has taken. But first, on the global economy, we saw Apple sending shockwaves last week throughout the market, cutting its sales forecast, citing weakened sales in China. We have these new U.S.-China trade talks getting underway. We just heard Dan Niles talk about emerging markets and how they're very slow and slowing down. What's your take on the global economic slowdown that so many people have spoken about?
So outside the U.S., the global economy is slowing. It's an issue particularly for Europe and China. And the answer for why that's happening is very simple. Unlike the U.S., they haven't implemented pro-growth policies. So they're running out of natural steam, and they really do need to implement some pro-growth policies.
Okay, so the European markets certainly have reflected that. What about the U.S., Mohammed? Because there's all this worry about the U.S. Meanwhile, we just got those incredible jobs numbers on Friday. We're not seeing much inflation. What's your take on the U.S. right now?
So the U.S. economy is in a very good place, and you saw that in the employment numbers. Not only do we continue to create a lot of jobs, not only are wages going up, but we're attracting people back into the labor force, which is good for potential GDP. There's two headwinds. One is self-inflicted wounds, Fed miscommunication being an example, and they're trying to fix that. And the other is spillbacks from what's happening in the rest of the world and from volatile markets. So to go further forward on the U.S., you need another round of policies, and infrastructure is something that I think you can get both parties to focus on. You need to deal with the self-inflicted wounds, and you need U.S. leadership to get other countries also to focus on pro-growth. And if we get that, the U.S. economy can continue to grow at 2.5% to 3%.
Well, what about this idea that the Federal Reserve is sitting on potentially a huge mistake? I mean, they've talked about raising interest rates. Now they're pivoting, saying, well, we're not in any rush to raise interest rates, so maybe we'll only see 2 rate hikes next year as opposed to 4 that we saw, 2 rate hikes this year in 19 as opposed to 4 that we saw in 2018. But, Mohammed, they're still unwinding that huge balance sheet. They've got to unload, what, $4 trillion of securities on the balance sheet, $60 billion a month.
Yeah, and I think the Fed has understood, and it's this notion, like President Trump said, of getting a feel for the markets. The Fed has understood that the market doesn't like this notion that the balance sheet reduction you just spoke about is on autopilot. Why? Because that puts a huge burden on interest rate policy, and that amplifies the effects of any signaling on interest rate policy. So what the market was looking for is for the Fed to realize that it can't be on autopilot, that it has to be more sensitive to what's happening, not just in the U.S. economy, but also to what's happening globally. And that's what the market heard from Chair Powell, and that's why you got such a powerful rally on Friday.
Well, I mean, I remember talking with you over the years about coupling, decoupling, and I think when all was said and done, there is no decoupling. We are all coupled together across the world. So when does this weakness outside of the United States start impacting the U.S.?
And that's the big question. You know, in the last 12 months, we've gone from the hope of synchronized pickup in global growth with everybody doing better to divergence with the U.S. outpacing Europe and China. And now we're worried about the wrong type of convergence. We're worried about the U.S. slowing to the rest of the world instead of the rest of the world picking up towards us. There's nothing predestined about the wrong sort of convergence. It's about policies here and in the rest of the world, and it's about avoiding mistake. The one thing I would tell you, as much as we focus on the Fed, Maria, we should also focus on the ECB. If we think the Fed is in a challenging place, the ECB is there 10 times over.
Mm-hmm. I see. So are you expecting further stimulus from the ECB, Mohammed? What are you expecting from the other central banks of the world?
So I think the ECB is going to try to continue to fly under the radar screens. It will confirm two things. One is that markets can no longer rely on ample and predictable liquidity injections from central banks. And two, it will confirm that central banks have inadvertently gone from repressing volatility to contributing to it. That is the reality for markets, and investors should just buckle up because the volatility is going to continue.
Well, you think the volatility that we've seen in the stock market in 18 continues in 19 then?
I do, and it's going to continue until you get an alignment, a favorable alignment of three things: policy, economic fundamentals, and market technicals. We saw how powerful that can be on Friday, but what has happened so far isn't enough. We need more progress to make sure we can get this alignment again.
So how do you feel about markets right now, Mohammed? How would you be advising in terms of buying or selling in the stock market, given all of these issues that we're faced with?
You know, it depends from individual to individual, depending on their risk preferences and their savings. But I would say keep in mind three things. One is this is going to be a very volatile market. So make sure you can control the misbehavior that happens when markets suddenly fall or markets go up. People tend to get either too negative or too positive. So one is just get ready for volatility. Two is have a cash cushion. That will give you resilience. And three, remember, in these volatile times, good companies get thrown out with bad companies. So look for companies with strong balance sheet, strong cash generation, and strong management. You're going to get bargains in the weeks ahead.
And real quick, Mohammed, do you think that we do get a deal with China?
I do. I think China has realized what Korea, Mexico, Canada, and the EU have realized, which is if you get into a trade war with the U.S., you will lose. So it's much better to make concessions than stay in a trade war and risk something much worse.
Wow. Interesting stuff. Mohammed, it's great to see you this morning. Thanks so much.
Thank you, Maria.
Mohammed El-Erian joining us there from Allianz.